Quick disclaimer before we start, this is not financial advice. I'm not a financial advisor. Bitcoin is extremely volatile and you could lose everything you invest. Only invest what you can afford to lose. Do your own research. My colleague refused to buy Bitcoin at $30,000 because he couldn't afford a whole coin. He had $5,000. Could have bought 0.17 Bitcoin. Today that would be worth $16,150. He made $200 in savings instead. Lost $11,000 because of a psychological barrier that doesn't actually exist. My name is Ryan, and I spend way too much time thinking about why people convince themselves out of financial opportunities by waiting for perfect conditions that never arrive. If you've looked at Bitcoin, felt intrigued, but talked yourself out of it because the price seems too high or you can't afford a whole coin, this video is going to change how you think about this completely. Hit subscribe, give this a thumbs up, and let me show you why 0.1 Bitcoin, which costs about $9,500 at current prices, might be one of the most asymmetric bets available to regular people right now. Because what most people don't understand is this: 0.1 Bitcoin isn't about being early, it's about being positioned. The whole coin fallacy. The first mental block you need to break is the whole coin fallacy. Most people think about Bitcoin like stocks. You buy one share of Apple, you buy one share of Tesla, so naturally you want one Bitcoin. But Bitcoin isn't a stock. It's divisible to 8 decimal places. The smallest unit is called a Satoshi. 1 Bitcoin equals 100 million Satoshis. 0.1 Bitcoin equals 10 million Satoshis. You don't need a whole Bitcoin any more than you need a whole ton of gold. You buy what makes sense for your portfolio size. For most people, that's a fraction. But psychologically, owning 0.1 of something feels incomplete. Feels like you're not really in the game. Like you're playing with toy money while the real investors own whole coins. This psychological barrier keeps people out. They see the $95,000 price tag for 1 Bitcoin and think, I can't afford that. They never do the math on 0.1 at $9,500 or 0.01 at $950. The whole coin fallacy is expensive. 0.1 Bitcoin is a meaningful position. It's 10 million Satoshis. It's exposure to an asset that has outperformed every major asset class over the last 15 years. What 0.1 Bitcoin actually costs and what it could become. At $95,000 per Bitcoin, 0.1 costs $9,500. Not pocket change, but accessible to someone who's been saving consistently. Comparable to a used car down payment or a few months of rent. The real question isn't whether you can afford it. It's what else would you do with $9,500 that has better long-term asymmetric potential. Run 3 scenarios. Put $9,500 in a high-yield savings account at 4.5% interest. In 10 years, that becomes $14,850. Safe. Predictable. You made $5,350. Put $9,500 in the S&P 500 at historical average returns of 10% annually. In 10 years, that becomes $24,640. Solid. Respectable. You made $15,140. Put $9,500 in Bitcoin. Now this is where it gets interesting because Bitcoin doesn't move like stocks or savings accounts. It moves in 4-year cycles driven by something called the halving, a built-in scarcity event. The 4-year halving cycle. Every 4 years, the amount of new Bitcoin created gets cut in half. This supply shock has historically triggered massive price increases 12 to 18 months after each halving. The last halving was April 2024, which means we're currently in the early stages of what has historically been the most explosive growth phase. This is speculation, not a guarantee. Past performance doesn't guarantee future results. Bitcoin could go to zero, but look at the historical pattern. After the 2012 halving, Bitcoin climbed from $12 to $1,150 over 18 months. That's a 95 times increase. Think about that for a second. 95 times. After the 2016 halving, Bitcoin went from $650 to $19,500 over 18 months. A 30 times increase. After the 2020 halving, Bitcoin rose from $8,500 to $69,000 over 18 months. An 8 times increase. Notice the multipliers are decreasing as Bitcoin matures. 95x, then 30x, then 8x. Makes sense. Harder to multiply a $1 trillion asset than a $10 billion asset. But even a conservative 3 to 5 times from current prices over the next 18 months would put Bitcoin at $285,000 to $475,000. At 3 times, your 0.1 Bitcoin position becomes worth $28,500. At 5 times, it's worth $47,500. Compare that to the S&P 500 scenario where you made $15,140 over 10 years. Bitcoin could potentially deliver that in 18 months. Not guaranteed. Bitcoin is volatile. It dropped 83% from its peak in the 2018 bear market and 77% in 2022. Could happen again. History suggests it will happen again at some point. But if you can hold through volatility and think in 4-year cycles, the asymmetric upside is undeniable. But you might be wondering, Bitcoin's already at $95,000. How much higher can it realistically go? Market cap math. Why $500,000 plus is possible? Fair question. Do the math on total addressable market and scarcity. There will only ever be 21 million Bitcoin. Hard-coded into the protocol. Can't be changed. Can't be inflated away. Fixed supply forever. Of those 21 million, approximately 4 million are permanently lost. Sent to wrong addresses. Lost private keys. Early miners who threw away hard drives. Gone forever. So the actual circulating supply is closer to 17 million Bitcoin. Global wealth, meaning all the money, stocks, bonds, real estate, gold, everything, is approximately $900 trillion. If Bitcoin captured just 1% of global wealth, that's $9 trillion in market cap. Divided by 17 million Bitcoin in circulation, that's roughly $529,000 per Bitcoin. Your 0.1 position would be worth about $53,000. At 5% of global wealth, which is half of where gold sits today at 10%, Bitcoin could reach $2.6 million per coin. Your 0.1 stake jumps to $260,000. These aren't fantasy numbers. These are market cap calculations based on Bitcoin serving as a store of value and hedge against monetary inflation in a world where governments print currency at unprecedented rates. The US national debt is $36 trillion and growing by $1 trillion every 100 days. The Federal Reserve's balance sheet exploded from $4 trillion to $9 trillion during COVID. Every major economy runs massive deficits and prints money to cover them. Bitcoin is the only asset with a fixed supply in a world of infinite monetary expansion. Scarcity plus demand equals price appreciation. Basic economics. But before you get too excited about these projections, let's address the elephant in the room. Volatility, the price of asymmetric returns. Bitcoin dropped 83% from $19,500 to $3,200 in 2018. Dropped 77% from $69,000 to $15,500 in 2022. History suggests another 60 to 80% drop will happen eventually. If you buy at $9,500 and it drops 70%, you're looking at $2,850, down $6,650. Real money hurts. Most people panic sell at the bottom, lock in losses, swear off Bitcoin forever, then watch it rally back to new all-time highs while they sit on the sidelines bitter. The people who make life-changing money understand the 4-year cycle. They buy during bear markets or early bull markets. They hold through inevitable corrections. They don't check the price every day and panic at red numbers. You're not buying for next month, not for next year. You're buying as a 4-year minimum hold, ideally 8 to 12 years, as a hedge against monetary debasement and a bet on continued adoption as digital gold. If you can't handle watching $9,500 potentially become $2,850 temporarily without selling, then Bitcoin isn't for you. Stick with index funds. Nothing wrong with that. But if you can handle volatility in exchange for asymmetric upside, this is one of the most compelling risk-reward setups available. If this is making sense so far, hit that like button right now and drop a comment. How much Bitcoin do you already own? Let's see where everyone's at. Institutional adoption changes everything. Massive institutional adoption is happening right now. BlackRock, the world's largest asset manager with $10 trillion under management, launched a Bitcoin exchange-traded fund in January 2024. It became the fastest-growing ETF in history. $30 billion in assets in less than a year. Fidelity launched one. Invesco launched one. Franklin Templeton launched one. 13 Bitcoin ETFs now trade on major exchanges, making it easier than ever for institutional money to flow in. Michael Saylor's company MicroStrategy has bought $42 billion worth of Bitcoin, holds over 500,000 Bitcoin on its balance sheet as a treasury reserve asset. This isn't just early adopters and retail traders anymore. This is mainstream financial institutions recognizing Bitcoin as a legitimate asset class. When $10 trillion asset managers are buying, when public companies are converting treasury reserves into Bitcoin, when nation-states are exploring adoption, the dynamic changes fundamentally. Institutional adoption is still in the first inning. If even 5% of institutional capital eventually allocates 1% to Bitcoin, that's hundreds of billions of additional demand for an asset with a fixed supply of 17 million coins. More buyers than sellers. Price goes up. Every institutional allocation, every company treasury purchase, every nation-state adoption increases demand for your 0.1 Bitcoin position. The risks nobody talks about. Let's be honest about the risks, because they're real. Regulatory risk. Governments could ban Bitcoin or heavily restrict it. Some countries already have. The US could crack down on exchanges, make it difficult to convert to dollars, or impose punitive taxes. This would severely impact price and usability. Competition. Bitcoin isn't the only cryptocurrency. Ethereum, Solana, and thousands of others compete for attention and capital. If a superior technology emerges, Bitcoin's dominance could erode. Environmental concerns. Bitcoin mining uses massive amounts of energy. This draws criticism and could lead to restrictions or bans based on environmental policy. While the network is increasingly powered by renewable energy, the perception problem remains. Quantum computing threat. Future quantum computers could theoretically break Bitcoin's cryptographic security. This is a long-term risk that the network would need to upgrade to address. Not an immediate concern, but worth acknowledging. It could go to zero. This is always a possibility. If adoption stalls, if a critical flaw is discovered, if governments coordinate a global ban, Bitcoin could become worthless. You need to accept this risk before investing a single dollar. These risks are why you only allocate 1 to 5% of your portfolio to Bitcoin. Not 50%, not 30%. A meaningful position that could change your life if it works, but won't destroy you if it doesn't. How to buy and store safely. Use a reputable exchange. Coinbase, Kraken, Gemini, all fine. Create an account. Verify your identity. Link your bank account. Buy takes 15 minutes. The hard part is custody. Leave it on the exchange or move it to self-custody. Leaving Bitcoin on an exchange means trusting them to hold it. Easier, more convenient, but introduces counterparty risk. The risk that the exchange gets hacked, goes bankrupt, or freezes your account. Happened with Mt. Gox. Happened with FTX. Self-custody means moving it to a hardware wallet you control. You own the private keys, the cryptographic passwords that prove ownership. Nobody can freeze your account or take your Bitcoin, but you're responsible for not losing the seed phrase, the 24-word backup that can restore access to your Bitcoin. Private keys are like the password to your Bitcoin. The seed phrase is like the master password that can regenerate all your private keys. Lose the seed phrase, lose the Bitcoin forever. No customer service, no password reset. Gone. For a $9,500 position, start on an exchange for convenience, then move to self-custody once you understand the basics. Buy a Ledger or Trezor hardware wallet for $80 to $150. Follow the setup instructions carefully. Write down your 24-word seed phrase. Store it somewhere safe. Never share it with anyone. Now your Bitcoin is truly yours. No exchange can freeze it. No government can easily seize it. No bank can block it. The psychology of holding Bitcoin. The psychology of holding Bitcoin is different from stocks or cash. With stocks, you're betting on a company's future earnings. With cash, you're trusting a government not to devalue it. With Bitcoin, you're betting on math, cryptography, and a global network secured by more computing power than every supercomputer on Earth combined. Bitcoin doesn't care about quarterly earnings, doesn't care about Fed policy, doesn't care about elections or wars or recessions. It runs on code, produces a new block every 10 minutes, cuts supply issuance in half every 4 years, marches forward regardless of human drama. There's something psychologically powerful about owning an asset that exists outside the traditional financial system, that can't be printed, that has a fixed supply cap, that you can take anywhere in the world with just 24 words memorized. Bitcoin is more than an investment. It's insurance against monetary chaos. It's a hedge against government overreach. It's a way to opt out of a system designed to slowly erode your purchasing power through inflation. And 0.1 Bitcoin gives you meaningful exposure to all of that for less than the cost of a used car. The final consideration: can you afford not to have exposure? Say you're wrong about Bitcoin. It goes to zero. You lose $9,500. Painful, but survivable if you only allocated 1 to 5% of your portfolio. But what if you're right and you do nothing? Bitcoin goes to $500,000 over the next 8 years. That 0.1 position you didn't buy would have been worth $50,000. You left $40,500 on the table because you were scared or skeptical or waiting for a better entry point. Which regret is harder to live with? Losing $9,500 or missing $40,500 in gains? The pain of missing out on a generational wealth transfer is far worse than the pain of a speculative bet going wrong. And you can size accordingly. Maybe 0.1 feels like too much risk. Fine. Buy 0.05 Bitcoin for $4,750, or 0.02 Bitcoin for $1,900, or 0.01 Bitcoin for $950. The point isn't the exact amount. The point is getting exposure, getting skin in the game, positioning yourself to benefit if this continues doing what it's done for 15 years. Your action plan this week: open an account on Coinbase, Kraken, or Gemini. Takes 15 minutes. Link your bank account. Buy $1,000 worth of Bitcoin, about 0.01 Bitcoin at current prices. Just to start, feel what it's like to own an asset that moves 5 to 10% in a day. Get comfortable with the volatility. Learn the ecosystem. Then decide if you want to add more. Maybe you $cost average $500 a month for 6 months until you hit 0.1. Maybe you do a lump sum. Maybe you stop at 0.01. But at least you'll know. At least you'll have participated. At least you won't look back in 2030 wondering what could have been. The people who changed their lives with Bitcoin weren't the ones who timed the bottom perfectly. They were the ones who bought and held through the chaos, who ignored the noise, who believed in the long-term thesis even when the price was down 70%. 0.1 Bitcoin is about $9,500 today. Could be $30,000 in 18 months. Could be $50,000 in 4 years. Could be $250,000 in 10 years. years. Or it could go to zero. Asymmetric upside with cap downside. You're not betting your life savings. You're allocating 1 to 5% of your portfolio to the hardest money ever created in the middle of the biggest monetary experiment in human history. If this gave you a new perspective, hit that like button. Subscribe for more real analysis. Drop a comment. Do you own any Bitcoin yet? Why or why not? My name is Ryan. 0.1 Bitcoin changes everything. Not because it makes you rich overnight, because it positions you for what might be the greatest wealth transfer of our generation. Your move.